Next slide. This slide again shows kind of graphically where everybody is in terms of reimbursement speed. We've used the IADI survey. What's interesting is you can see that the more successful deposit insurers in meeting this goal tend to have a wider mandate. And we think that also reflects more resources and better IT systems and that sort of thing. When you look at regions, some regions are more advanced in meeting that goal than others. The ERC, I mean, it's sometimes difficult to see there, but in the second set of bars, ERC is the European Regional Committee. They have a very high compliance rate because it's mandatory. It's in law. And that came from the crisis. Europe went from having one of the lowest standards in payout ratios to some of the most stringent. Because in the financial crisis, many European deposit insurers could not do a payout in even 6 months. So the authorities ended up using bailouts. So that's changed, and there's been a progress. ARC, where we put the star, has some more challenges, particularly in this, because they're newer systems. Information collection is maybe not as advanced as in other areas, but it's been moving up. It's been moving up, and so these are encouraging signs. Okay, next slide, please. I'm going to talk a little bit about IADI. Next slide, please. Okay, and IADI's been here since 2002. We were established in Basel with 25 founding members. We now have 91 members, 8 associates, 14 partners. We have a pretty simple goal: contribute to the enhancement of deposit insurance system effectiveness by promoting guidance and international cooperation. But I like to think it's a little even simpler than that. We want to promote more effective deposit insurance systems. We want to promote and encourage our members to better protect their depositors and better contribute to financial stability. And we do that in a number of ways. The core principles are a key area. And as I mentioned before, they were introduced in 2009 and revised in 2014. But we also do things like research and guidance. We have core principles, research and guidance committees, a research unit in the Secretariat, and we've produced since 2002, about 35 research and guidance papers on a wide variety of areas. Our members participate in developing that guidance. We also undertake biennial research conferences and the annual survey. So those are sort of key areas on the guidance side. Training and capacity building is another area. I'll talk a little bit more about that in some of the other slides. But the regions are critical for our training. We have 8 regions. We have regional committee meetings around the world. And with each of these, we are introducing now technical assistance workshops, because the regions have told us some of their needs are different than other regions. So we try to highlight a particular area where a region's having challenges, and we use that as our technical assistance workshop area. Okay. This shows the growth and development in IADI membership. It, again, sometimes mirrors that other chart you saw about the global area. Shocks and crises tend to drive membership. We had a big jump in 2007 and 2008, but we're moving up very quickly, I think, to our goal, which is to try to have every deposit insurance system in the world as a member. Okay? This is the global map. It's a computer-generated one, so they've left out a lot of lakes. I noticed Lake Victoria wasn't on there, but they missed out on the Great Lakes in Canada as well. So, but anyways, that gives you an idea of the map and our challenges. We got Africa, still quite a number of jurisdictions in Africa, and of course we have China, People's Republic of China, which has introduced a deposit insurance system, and we're in discussions with them now about joining IADI. But we like this map. It keeps getting more and more blue. Even our friends in New Zealand have announced they're going to be introducing a deposit insurance system, one of the last holdouts. And so we look forward to working with them as IADI members in some capacity. Next slide. In terms of goals, objectives, we have 3 that we're working towards in our current strategic plan. One is to promote our core principles and compliance. The other is advancing deposit insurance research and policy development. And a third is providing members with technical support to modernize and upgrade their systems. Okay. Core principle compliance. I've talked about a lot of these things, and I must apologize. I tend to have wordy slides, but these are so you can take them home and read them at your leisure. I won't go into all of these things. But we're doing a number of things to try to enhance our compliance of our members. We're trying to develop a system where we can, they're called self-assessment technical assistance programs and SATEPs. And so anyone who is a member of IADI is eligible for a SATEP. They're really, I think, a critical area that we've been working with in our members. What that implies is that you would have a group of IADI experts who would visit your country and help you do a self-assessment. And they would help guide you through that process to find out your strengths and your weaknesses as a system and where you can improve. And we've been doing a lot of these. We have about 8 of them that have been done or underway right now. And a lot of countries find them helpful just prior to an FSAP or an IMF or World Bank technical assistance project. This helps them understand their own system better so that when the teams from the IMF or World Bank come, they're in a better position to work with the fund and the bank in terms of areas where they need technical assistance or they want to improve as part of an FSAP. I think another way that we're trying to improve is to work with other international associations. Look, I think they've advanced one of my slides, but other association is BIS, IMF, World Bank, FSB. Particularly in the BIS and FSB have helped us out quite a bit. Okay. Other areas are research. On the research side, I just want to emphasize again the importance of our IADI survey. We now go back to 2008 with data on deposit insurance systems, and it's been an important area for us to track progress on the research side. But we've also been trying to build a better capacity to do research. Most recently, we have introduced papers in areas such as the role of deposit insurers in contingency planning and system-wide crisis management. We have just, in the last year, introduced papers on target funding. We're working now on a special paper on differential premium systems. That's headed by the FDIC. We're looking at best practices in risk pricing for deposit insurance, and also looking at ways that we can help deposit insurers undertake better risk management and internal controls. So that's quite a bit of work the association's doing in that area, and we're looking in the future to expand our research capacity with more resources to commission from academics papers on deposit insurance. Next slide. Okay, technical assistance. A key area is with our regions are what we call technical assistance workshops, and to help our members find their gaps in their systems. Since 2017, we've conducted a lot of technical assistance workshops. We've done assistance involving over 600 people in the workshops, and we have more planned, particularly in areas like Africa over the next year. We have some things coming up in Ghana, so I would encourage you to think about that and sign up for that. And also, I think we've also developed a new knowledge management system. I would say every year IADI is involved with running at least 12 conferences or workshops. We now collect all the information and presentations from our workshops, including the one we have here, and we put them on our database. And that is accessible to members. So any conference, any function anywhere in the world, all the information now is collected for our members, and they can use those. Okay, next slide. Julia said in the presentation, let's talk about member benefits and why you want to join IADI. These are, I think, what are the major benefits of being part of IADI. I think number one is IADI is more than just an association, it's a standard setter. The core principles are an international standard. We're based in Basel. Right next to us are the Basel Committee, the Financial Stability Board, the International Association of Insurance. All the standard setters are there. And we work very, very closely with them because as the BIS tries to develop a coherent system of standards. And that's important because as members, you can play a role in crafting those standards and deciding how to meet them. and you can sit at the table in designing them. And that's, I think, a really critical advantage of being a standard setter for IADI. We also see ourselves as a really great way to share expertise and information on deposit insurance through events like these, conferences, training. We are a member of the Financial Stability Institute, and FSI is located in Basel, and they have FSI Connect and a lot of technical training programs. And so this access, I think, is very important for members in terms of information, sharing, knowledge, expertise. Next slide. Okay. Other things that we have access to our survey. We have a members-only website, which gives you very detailed access to data. We have surveys that's available on our website, but the detail behind all that survey is available. I think that's quite important. Access to research, being able to be on research committees and groups is, I think, another critical point. And at the very end, 11 is, I think, one of our most important, and that's access to the CETA program. You have to be an IADI member to get that specialized technical assistance that we can provide. And we've been working to expand that. We used to have only 1 or 2 CETAPs a year. Now we have 4 planned for the next year. It's one of our most popular programs. But it is intensive in terms of resources, so that's why we tend to restrict that just to members themselves. Next slide. You can join IADI in a number of ways. Being a member is the most comprehensive way to do it. You get the most benefits, access to all the services we provide, and including the ability to vote at our annual general meeting and to seek positions on our executive council. We have 25 people on our executive council. We have elections every year as positions open up, and that's a great way to influence the agenda of the association. And I think over time, with the rapid growth in Africa, I think as time evolves, we'd like to see more members from Africa on the Executive Council. And it often reflects the proportion of deposit insurance systems in a region, but I think there's opportunities there to have the voice of Africa heard better by being a member of IADI and being on the Executive Council. Associates is another status for joining the association. Associates aren't members, but there usually are entities such as central banks or supervisors that, while they don't provide deposit insurance themselves, they have a key interest and role. And we're lucky here in Uganda. We have DBF as our member, but the Bank of Uganda is an associate. And the other areas associates like to be associated with IADI is we work a lot with the Financial Stability Board in Basel. So a lot of the rules on resolution for systemic banks that come out of the FSB, we can share that information as well with our members, and particularly central banks who are interested in that area who may have a wider role in resolution. Partners, we have partners as well. We have 14 partners, the World Bank, the IMF, the Basel Committee, FSI, European Forum of Deposit Insurers. So we like to think of this as almost a community of members, associates, and partners. Annual fees, our members pay 17,650 francs, Swiss francs, per year. There is an initial fund contribution. And associates pay a lower fee, but they have a less interaction and access to services as members. I should say as well that in IADI we've been re-examining our strategic plan and our goal for the next few years. And one of the messages we've received from members is they'd like differentiated fees. So when looking at the strategic plan ahead, we've looked at some of the needs of members, and members have indicated to us they'd like more resources in training and technical assistance. They'd like us to strengthen our internal capacities. And in doing so, we're looking at seeking more resources from our members, but doing so by introducing a differentiated fee. Members with less financial resources pay less. Members with more financial resources pay more. So in the next month or so, we'll be putting out a special proposal to our membership that they can look at this and think about this for comments and approvals in our AGM in October. So stay tuned. We're still working on that with our Executive Council, but it should be out soon. Okay. Okay. In the interest of time, I know Julie had asked me to talk about the core principles. I'm going to go over them in a very high-level way. I'm obviously not going to go through all of them, but our core principles really have three objectives. One, improve effectiveness of systems, ensure our core principles are adaptable, and also develop and design deposit insurance systems so they mitigate a moral hazard. Next slide. Okay. This sort of shows you the 16 core principles we have and all the various areas. In this conference, we're going to be concentrating on 2 and 3, mandate, powers, and governance, because they're what we call foundational core principles. But we look at core principles in all these various areas. In 2014, we revised them a lot to try to increase the standards, because before 2014, we didn't really have a payout target. We do now. And we didn't have a requirement for financial systems to have all the necessary resolution tools, but that's been sort of incorporated into them. I was asked to focus, sorry, next slide please, on a couple of them, CP2, Mandate and Powers. And since you have this, you'll have access to this slide deck, I'm not going to go through all of these, but the most important thing here is to understand is that mandate and powers are going to be system specific. We don't try to say every deposit insurer has to have a certain type of mandate. We leave that up to the system to decide, but whatever mandate you have, it's important that it be clearly defined and that you have the powers to support it. Some of the problems come when a deposit insurer has a very ambitious mandate, but it doesn't have the necessary legal powers or the resources to do that. And that's, I think, a critical thing. And also just really basic powers that all deposit insurers need. All deposit insurers need access to information on a timely basis, regardless of mandate. They need the powers to reimburse insurers, to have standards for the insured banks. They need appropriate budgets. And very critically, deposit insurers need operational independence. An effective insurer has the ability to independently control its operations and meet its own requirements without undue interference from other parties. And it's a key element of in mandate powers and also in governance. Next slide. Governance, another area. Again, we talked a lot about the importance of operational independence and meeting the standards of governance, but really this is pretty fundamental stuff. It's not just, when we developed this core principle, we weren't just looking at deposit insurers, we were looking at any organization. And what do you need to be an effective organization? Well, you have to have operational independence, clear goals and objectives. Like any system, you need integrity, so you don't have undue influence. But like all systems, you've got to be accountable, and you need disclosure and transparency. So all of these are built in to core principle 3 on governance. And this is actually a challenge in a lot of systems because they're very high standards. But it was important for us in the core principles to lay these out very, very clearly. Next slide. I won't go through that, but it's also one of our longest core principles, so hence the detail you see. Okay, next slide. So this is kind of the last section of slides that I wanted to leave you with. And this is kind of looking at where we are now as deposit insurers, as our membership, and where we're going to go in the future. We collect a lot of information on how our members are doing against the core principles. This is about 34 self-assessments put into this format. It's pretty, I think, simple in the sense that the turquoise colors are good and the green colors are good. That means you're compliant or largely compliant. The orange and the reds are not so good. That means that we're materially non-compliant or not compliant in a lot of areas. By and large, the membership has a pretty high compliance area, assessment, but there are areas we need to work on, and where a lot of our members have told us they're struggling. One of them is powers. We still have a significant number of IADI members that don't have access in a timely way to basic bank depositor data from their supervisors. And that frustrates the process for bank resolution and payouts. So it's, I think, a pretty critical area where we need to do more work on. The other one is core principle, where we talk about 6, relationships with other safety net participants. And there's been a lot of improvement in this area, but there's challenges as well. A lot of deposit insurers still don't have what we call formal information sharing and cooperation agreements with their supervisors or their resolution authorities. And this creates problems in a bank failure. It creates delays, it creates confusion. So as our core principles focus on having formal agreements, MOUs, sometimes in legislation, this is an area where we're still trying to move forward and where there's still, unfortunately, some challenges. Topic 11, funding is another area. Well, most deposit insurers already have a pre-fund. Most funds are acknowledged maybe not to be adequate to deal with all the types of banking failure risks that the members have. Sometimes members have a realistic fund target ratio, but they have very low premium collection, so it's going to take time for them to reach that. So funding is, I think, a key area, and it's also a key area for credibility in systems. And finally, the resolution side. The core principles talk about having a full resolution toolkit, and that doesn't mean that it's just a deposit insurer that has all the resolution tools. Depending on your system, the deposit insurer may have some resolution tools, and another authority might have them. But we follow the FSB guidelines in this area, and that is countries now are expected to have a full range of resolution tools to deal with small, medium-sized banks and large banks. And that's still a struggle in a lot of jurisdictions, particularly with some of the new requirements from the FSB. And 17, the last area is that we talked about the need for more rapid payout. And as I said, only about half the members meet the current standard. So this is a challenge for us to try to help our members improve in that area. Okay, next slide. And then people ask me as well, from all this work you do looking at your members and where they are in compliance and these issues and challenges that the members have, what are some of the areas that we see trends in, emerging issues, some of the developments in deposit insurance? Well, here's a few. One, there's been an increase in coverage limits just about everywhere. And this reflects a lot of things, but I think the big shock was in 2007 and 2008. Before then, a lot of deposit insurers were erring on the side of being cautious, not wanting to cover, having low coverage limits, not wanting to cover too many depositors. They were worried about moral hazard, issues like this. But then when a shock came to the system, if you're not covering the majority of individual depositors, then that creates runs, it creates stability issues. So now, in most deposit insurance systems, they're trying to err on the side of, if we're going to have maybe having too much coverage is better than having not enough. There's no use in having a deposit insurance system if you don't cover enough people and you have runs. So if people are concerned about coverage limits being too high, there's ways to correct that. But this was a key limit. So we've seen that a big increase in coverage limits. So what Uganda's done, I think, is reflective of a lot of our members. They're looking at financial stability more, and so that implies more extensive coverage. Mandates and powers, as we saw in the chart, there's been an evolution in deposit insurers from simple pay box systems to adding some resolution powers to deposit insurers. And I think this is only natural. In a lot of countries, if you have a deposit insurance system and a mechanism to do payouts and a fund, you have the infrastructure for resolution. And it makes sense for certain types of institutions that it's a deposit insurer role. So we've seen a clear trend in this area, including in some jurisdictions, even making the deposit insurer the systemic bank resolution authority. Next slide. We talked about faster payout speeds. Information sharing and coordination now. It's pretty well recognized, I think, that this is an area where everyone in the safety net has to work harder at, and more formal arrangements for doing so. Formal MOUs between all the safety net participants, the creation of financial stability committees. All of these are areas that we're seeing more and more of in the area. Funding is another area that's getting attention. Not just having a fund, but having an adequate fund. So many insurers, and I'll use an example in Europe, they have targets for funding now in Europe for all the deposit insurance systems, but less than half of them are even close to meeting their target funds. So this is an area that is getting a lot more emphasis and now and it will in the future, I think. Next slide. Okay, some of the other areas we talked about, powers, contingency planning and crisis preparedness. I would say before 2008, a lot of deposit insurers were not really included in the contingency planning and crisis preparedness framework in their countries. But now that people have seen the importance of deposit insurers, now IADI, and we've been getting a lot of help from the World Bank and the IMF in promoting this idea is that everybody should be at the table in contingency planning and crisis preparedness. Since all the safety net players play a role, they should be there and there should be free information exchange. And finally, innovation. It's a key area, it's a growth area. A lot of people thought that digital finance wasn't affecting basic deposit taking, but it is. In a lot of ways, you know, in Africa, it's M-Pesa, digital stored value products. They're not just popular, but they're being insured. And we have a lot of jurisdictions who are insuring them. And cryptocurrency is an issue as well. And there's a big debate about cryptocurrency in the central banking community. Is it something that should be encouraged? Is it a risk asset? How do you deal with it? But for deposit insurers, it's important as well. We have to keep our depositors informed about what's insured and what isn't. If they're seeing new types of currencies come out, we're getting more and more questions. Is it insured? How can we find out? And I think in public awareness, there's this new role that instead of just letting people know you have a deposit insurance system, here's the terms and coverage, it's incumbent on deposit insurers to be able to inform the public about new instruments and whether they're insured. Because the last thing in the world you want is people moving into these new payment systems or instruments and them not being insured and not knowing that. So it's another sort of area where deposit insurers are working on. And next slide. Sort of my final word is I just wanted to bring this up as an area that we're working on a lot with IADI, with the Basel Committee and the BIS, and that is digital finance and stored value products. They're very interested in the work that we're doing in IADI, and in particular, they're interested in Africa and what's happening with digital stored value products. So in the future, this is an area we want to focus on in developing common guidance and standards in this area. And with that, I realize it's been a long presentation. I had a long list of things, but hopefully this provides at least some information in the areas you're interested in developments and trends in deposit insurance. And if you have any questions or comments, please let me know. Thank you.
Thank you, David, for that very comprehensive presentation. And I think you attest to the fact that deposit insurance is really wide and deep. It is not a shallow subject. It's not for the faint-hearted. Yeah. So we open up to questions, but before I do that, this presentation reminds me that even before we started the Deposit Protection Fund, we had our own person within the bank who had a lot of knowledge on deposit protection. And I'd like to ask Mrs. Bajenda to stand up for recognition. She's the one who spearheaded the process of creating a deposit protection fund in Uganda. It is also because of Mrs. Bajenda that we are here today. She's the one who proposed that the next ARC event must be held in Kampala. So Ugandans, thank you.
All right, good afternoon and welcome to the afternoon session. This can be a tough one depending on how much lunch we put in, but we will do our best to keep you awake and obviously interested in the session and following it. If, just in case you have difficulties, we will break for at least a second at some point and stretch a bit within the room, but let's see how it goes. Rosen, thank you for accepting to honor our invitation and be a resource person for this session and for this conference. By way of introduction, Rosen holds a master's degree in IT from the University of World Economics in Sofia. Rosen has been a wonderful resource to us at the board but he has been in this space for quite a while. His professional career has been in Bulgaria, where he spent many years, over 15 years, in banking itself, in the treasury function, with money market operations, liquidity management, managing the fixed income portfolio, basically asset and liability management. But he was later appointed chairman of the Bulgarian Deposit Insurance Fund and CEO of the institution in 2011, and he led the reforms and best practices there, especially in the areas of risk management and backstop funding. Deposit insurance corporations sometimes have challenges of funding, and he made a name there. He's worked with several safety net players. You will tell us what safety net players mean. But among the things that may be of interest to you was that there was a huge bank failure in Bulgaria, and he prepared the Bulgarian Deposit Insurance Fund for this, especially in areas of liquidity management, managing payout processes. He's been very active since then. He's a resource person in IADI, and obviously now he's a resource person in the World Bank Group. So this is the gentleman before you this afternoon. Let's give him a round of applause. So Rosen, I will ask you to speak to this important topic. The screens this afternoon are on the sides. I think the resolution is much better. And you'll walk us through the design features of a typical DPF or DIF. Especially that speaks to the theme of why deposit insurance. Once you are through, we will have opportunity to ask you a couple of questions, and that should be it. So welcome. I'll ask you to walk us through this.
Thank you very much, Wilbro. Mr. Chairman of the Deposit Protection Fund, board members, distinguished guests, it's a great pleasure and opportunity for me to be a speaker at this panel on that topic, design features of a deposit insurance scheme. It is obvious, and David Walker showed how important topic is this for African region with so many growing deposit insurance systems and so many countries still not launched their operationally independent deposit insurance schemes. So I'm glad that we have 27 nations from Africa represented here, and we could have a productive discussion on how to organize and what mandate and powers to incorporate in the potential designs or a reform of the deposit insurance system that you probably plan in your country. So in this presentation, I shall cover several topics. First is, what is financial safety net? What are the design features and how the deposit insurance system fits into this system with respect to its mandate and powers? Then we should cover the topics of standard setters and IADI core principle 2, which talks about the powers of deposit insurance systems. And this is as a benchmark put by IADI on that issue. Then we shall cover different deposit insurance system mandates and their policy implications. And we shall try to make some conclusions about what would be important to follow when we plan how to design our deposit insurance system, what mandate, what powers, what authority, responsibilities, and what would be the preconditions for us to be successful. But first, let's look at the architecture of the financial safety net and how the deposit insurer fits in this architecture. So typical deposit insurance scheme has its more or less narrow mandate to protect depositors, and it is recognized as a player together with the central bank, which is recognized to be a lender of last resort and to be responsible for stability of the currency, because without stability of the currency, we could not have financial stability. And Ministry of Finance or the Treasury, which is the final solvency support for the system. And how the deposit insurer fits in this system and how it is organized with respect to its powers and responsibility, we could outline different designs of the financial safety net. After the financial crisis in 2007-2009, it was recognized that a resolution authority should somehow fit in the financial safety net, together with the supervisor. So where the supervisor, where the resolution authority is placed among the Ministry of Finance, central bank, or deposit insurer, is it somewhere in these institutions, or these are independent agencies, institutions? This depends on what are the design features of the whole financial safety net players. But what is the mandate of the deposit insurance system? As David said this morning, primary mandate is to protect unsophisticated depositors and thus to contribute to financial stability by preventing bank runs. So the primary mandate of the deposit insurer is to be able promptly to pay out those small depositors that have to be protected in cases that financial institution is closed or is insolvent. After the financial crisis, it was recognized that liquidation of a credit institution is not always the best resolution outcome. So there has been standards and wave around the world to design resolution regimes. So in many deposit insurance systems, there was an additional mandate incorporated, deposit insurance funds to finance alternative measures to payout, such as when we have transfer of asset and liabilities of a troubled bank to another assuming institutions, the deposit insurance fund could financially support such transactions by providing funding on behalf to covered depositors. Of course, there are systems and there are additional supplementary mandates for deposit insurance systems around the globe, which characterizes different features of the financial safety net design. And it depends on how the system is designed and how central bank, Ministry of Finance, resolution authority, regulator, deposit insurer communicate and incorporate between each other with respect to their powers, responsibilities, mandates, objectives, public policy objectives. So in such supplementary mandates, the deposit insurer can be supervisor of the member institution. We have such deposit insurer even in Africa. It can be a resolution authority of a member institution or act as an institution which executes the resolution. Can finance alternative measures and can provide funding to resolution. Can be receiver or liquidator, or can combine any of these options that I just mentioned. But I should say that how deposit insurer mandate is designed, this is a policy choice and policy decision. And it depends on many things. First, what is the architecture of the resolution framework? What are the modalities, technicalities of the resolution framework? The other aspect is availability of other sources, non-taxpayers' money, to finance a resolution. The third thing is institutional capacity and historical background. For example, you could not put as a mandate to be a resolution authority just new established institution without capacity to design feasible and viable resolution strategies to be capable to deliver on such mandate. That might put at risk the whole financial system. We had such experience, I think, lately, last 5 years in Ukraine, where they, for example, gave the power of deposit insurance fund to be a resolution authority without the necessary the capacity. They didn't have such capacity to deliver on such objectives, so that was not very good for the stability of the whole system. The other aspect that should be assessed, this is when you design the features of the deposit insurer mandate. This is the liability structure of the member institutions and the financial system as a whole. Is it mostly a retail funded system? Does it have enough loss absorption capacity in a resolution? Is the banking system too concentrated as a market in 1, 2, or 3 institutions, which might not be very productive just to rely on payout mandate? The other aspect that should be assessed, this is when you design mandate of deposit insurer, this is the backstop arrangements. In case that the system is temporarily depleted because of delivering on its mandate, to have financial support from the government, which of course shall be paid back by the contributing institutions in long run. And probably another aspect that should be looked at, this is priority scheme or hierarchy of claims, how it is designed in potential liquidation of a financial institution, because it is one parameter where, which reflects the potential liabilities of the deposit insurance fund in the country. To look at all these aspects of the mandate and funding, IADI came with standards. David talked about them. And one of the core principles Core principle number 2 of IADI talks about mandate and powers of a deposit insurer. Financial Stability Board also designed key attributes as a standards for effective resolution regimes. And key attribute principle number 6 talks about funding the resolution. These standards provide guidance and are considered as a benchmark how these varieties of these mandates should be incorporated, applying these principles. And of course, as we already said in the morning session, they provide for flexibility for different systems to be applied according to the size of the market development, or maturity of the system and business model which is in place. How to design the deposit insurer mandate? We should look at where are these functions of the supervisor and resolution authority placed. We should look at the availability of other sources of funding in resolution in order to find the answer what would be the design of the mandate of the deposit insurer in our jurisdiction. For example, which institution shall be the supervisor? Will it be the central bank? Will it be independent agency? Will it be the deposit insurance agency? It depends also on historical pattern how such institution, which was a supervisor, delivered practically and effectively, credibly delivered on its mandate to supervise and to, in this way, to contribute to the financial stability. A resolution authority, which was a new animal in the room after the great financial crisis, where to put the resolution authority. In many countries with maturer deposit insurance schemes, such might be the deposit insurance agency. For example, such is the approach in Northern America, in some Asian countries. But in countries which didn't have strong deposit insurance systems and institutions, or didn't have at all, it might not be appropriate to design such a system where you put the resolution powers in a new institution. A resolution fund and alternative funding sources for resolution. That shall be the other question to answer when you design the modalities of the deposit insurer mandate. Is the resolution fund available? What is the liability structure of the financial system? What is the concentration of the financial system? In order to provide for what the deposit insurance fund could finance in resolution beside narrow payout mandate. But I should stress that deposit insurer should have institutional capacity in order to expand the mandate in such direction which goes to provide alternative funding and to take appropriate, more sophisticated decisions in managing the fund and thus preventing depletion of the fund. What the standards are saying about the mandate of the deposit insurer. Core principle 2 is benchmark in this and says that mandate and powers of the deposit insurer should support the public policy objectives and should be clearly defined and formally specified in legislation. This core principle 2 refers to the authority and powers and responsibilities of the deposit insurance system, to its mandate. It requires for clarity in the definition what is the deposit insurer role, what is the authority and responsibilities within the financial safety net. It requires that these responsibilities and powers should be clearly defined in legislation. Some systems I have seen are very broadly set, and authorities tend to claim that some powers and authorities can be further clarified by secondary legislation or regulations. But this core principle clearly states that mandate, powers, and responsibility of the deposit insurer should be clearly defined and clearly stated in the legislation. As such, powers and responsibility should be defined in such a way to enable deposit insurer to meet its stated public policy objectives. For example, if we have the powers and authority to assess and collect premiums, to reimburse protected depositors, to have access to depositors' records in a timely manner and access to bank secrecy to do so, to issue regulations. All this should be put in the legal framework, meaning in the act which establishes deposit insurance system, or Financial Institution Act, which is the case in Uganda, banking code, loan banks, or whatever. And this is with the objective to deliver and to correspond in a prominent way to the stated public policy objectives, whatever they are. But of course, the primary should be to preserve confidence by protecting depositors, small depositors, unsophisticated, and there might be other objectives stated by the legislation or by the deposit insurer to promote and contribute to the stability of the financial system. But all these powers and authority, responsibility should be in the law to correspond to these objectives. The other aspect of this core principle 2 is the requirement that the mandate of the deposit insurance system should be aligned with the mandate of the other safety net players, and there should be clarity on the role and responsibility with respect to the role and responsibilities of the other financial safety net players. And I try to provide you here with a table with examples. What does that mean? For example, if the mandate and responsibility of the deposit insurance scheme is to protect only insured part of deposits, then the broader mandate of the supervisor, for example, is to protect the whole balance sheet of the financial institution. So these mandates should be aligned to see how to practically deposit insurance system to deliver on its mandate, where the supervisor not to be in a contradiction with the mandate of the supervisor, for example. Deposit insurer to provide opinion on a resolution strategy, to be consulted on use of deposit insurance funds, to finance resolution on behalf of insured depositors, or in some circumstances we shall see of all depositors, to avoid double payment by making sure that any institution which is resolved is viable, where the authority and mandate of the resolution authorities to design credible resolution strategy in line with resolution objectives. Another example is deposit insurer have a legally defined power to have access to a liquidity window, for example, or liquidity facility of the central bank for prompt payout, where the mandate of the central bank is to provide to be lender of last resort, among other mandates. For deposit insurer to have access to backstop facility funding for in case of banking crisis or systemic crisis, where the Ministry of Finance should have in place possibility to lend to deposit insurer in order to support such backstop funding arrangements. So the mandates and powers of different financial safety net players should be aligned in order to have credible system, in order to function, financial safety net to function as a whole system with the primary objective to deliver on financial stability. Further, the requirement of core principle 2 is that powers of the deposit insurer should support its mandate and shall enable deposit insurer to fulfill its roles and responsibilities. And I tried to outline here some examples where this might not be the case. For example, the power of and responsibility of the deposit insurer to pay out in 7 days, which is as a standard and is in many already legal frameworks as a requirement, but deposit insurer has no early access to depositors' records. This might prevent fulfillment and practical delivery on that responsibility to pay out in 7 days. If the deposit insurer have to only rely on a receiver or appointed liquidator to provide these depositors' records, it is practically not possible to pay out in 7 days. Or the requirement to pay out in 7 days when deposits are unavailable without clear trigger for payout. And on the other hand, if we have a responsibility and authority of the supervisor under temporary administration to suspend payments on some liabilities, including insured deposits. This is obviously a contradiction which does not support compliance with this requirement of core principle 2. Or the powers of deposit insurer to collect premiums without the power to assess the level of these premiums, and in case that it is backstopped in large payouts by the Ministry of Finance and it has to be replenished by the industry, if you don't have the ability to assess what would be the appropriate level of premiums, you may never be able to pay back your Ministry of Finance. So you should obviously have the power to assess the level of premiums. And this might be a hidden subsidization of the industry through such backstop mechanism. So I just wanted to outline to provide examples where powers of the deposit insurance fund might contradict with responsibilities and powers of other safety net players. So when you design your systems, you should try to explore and make simulations to see where the missing links or weak links, because the system is as strong as the weakest link is. So these are, of course, these are technicalities, but all the responsibilities and powers within the financial safety net players should be well calibrated in order not to have such contradictions or to be in a contradiction with principles for effective deposit insurance systems and key attributes for effective resolution regimes. And of course, there are minimum set of powers and authority responsibilities of the deposit insurer in order to effectively to deliver on the mandate of deposit protection. And they are here listed, some of them. To assess and collect premiums, to subrogate to the claims of insured depositors when they pay out, because this is a mechanism to replenish the fund from a bankruptcy state, and to make sure that this deposit insurance system acts as a system. Once you make a payout, then the fund is temporarily depleted, but then you have a mechanism to recover from bankruptcy state in an effective way. You should make sure that your bankruptcy regime is effective and to provide for the possibility to have effective recovery rate for the deposit insurer. The other power and responsibility power, which is very important, this is to issue regulations related to implementation of the deposit insurance system, which shall provide for the authority and to practically ask deposit-taking institutions, member institutions, to comply with these requirements. Of course, to reimburse insured deposits when we have a clear trigger, transfer or finance transfer of insured deposits into another institution in case of resolution, and other authorities which are listed here. I shall not try to read all of them. About the design features of the mandates, we could outline two pillars based on which we could distinguish or group, systemize different mandates. One is what the deposit insurer could finance, and the other is where the resolution authority or supervisor is placed within the safety net. So with respect to the first pillar, I tried to show here what is the narrow function of the deposit insurer, starting from the very narrow function of deposit insurance fund to pay out insured deposits, to the very narrow function of potentially a resolution fund, if it exists in the country, a resolution of non-deposit taking systemic financial institutions in order to contribute to the financial stability. And between them, there are different options what could be financed in broader financial crisis management toolkit. This is purchase and assumption transaction where assets and liabilities are transferred to another institution, so the deposit insurance fund can support such transactions financially, but only on behalf of insured deposits. Then such transaction on transfer of assets and liabilities, but where we could have transfer of all deposit books and other liabilities. Then bridge bank capital. Some deposit insurance funds could provide capital for bridge banking resolution. then for financial stability reasons, a resolution authority may exclude some creditors not to absorb losses. So who pays for this? In some countries, this is the resolution fund. In some countries, this is the government. In some countries, it might be even the deposit insurer could provide such funding. Capital and liquidity to asset management vehicle for possibility to purchase assets from a resolved institution or from institution which is troubled. This is clear function of resolution fund, of the resolution fund, if available, but in some countries this is conducted by the deposit insurance fund. Capital for bank in resolution or some open bank assistance, which means that to provide liquidity of a bank which has liquidity problems, which is still operating at the market, which is still solvent, or to provide capital support for a member institution. Such deposit insurer exists in the world, but this is not typically function of the deposit insurer. And as I said, the last, which is mostly function of resolution fund to provide funding for resolution of non-deposit taking institutions. The other aspect where you should assess the modalities of the mandates of the deposit insurer is where and how the deposit insurance system interferes with the function of the supervisor, a resolution authority, a receiver, or manager of asset management vehicle, potentially in a resolution. So narrow deposit insurer mandate is to pay out insured deposits. Some deposit insurer further could provide funding in transferring insured deposit books in resolution without the power and authority to provide opinion of the resolution authority on the amount that they contribute in such transaction. There might be design where binding opinion on the amount transferred or in such resolution transaction is required by the deposit insurance fund or to conduct a risk cost test if such transaction is financed by deposit insurance fund. There are systems in which deposit insurer is engaged in selection of resolution strategy or is the institution which designs the resolution strategies. And further, the functions of supervisors, resolution authority, or managers, asset managers, to finance early intervention measures, to be engaged in financing early intervention measures for potentially problematic banks based on its own risk assessment, to buy assets from troubled banks or to set up asset management vehicle, to set up bridge bank, or to have resolution powers to design and execute resolution strategies. So these are the powers as a second pillar based on which we could separate different deposit insurers' mandates. And based on these pillars, what deposit insurer can finance and how it is interfering with the function of the supervisor resolution authority, we could systemize 4 broader mandates, which are, of course, very conditional. First is paybox mandate, which is very narrow. And this mandate refers only to the power to pay out insured deposits in case that the bank is closed and liquidated. Then we have the second group of mandates, which is called Paybox Plus. I would say this is the most common mandate recently, especially after the global financial crisis. This provides for the initial mandate, primary mandate, to pay out insured deposits, but on top of this, to provide financial support when insured deposit books is transferred to another bank. And the third group of mandates is loss minimizer, where together with providing for payout of insured deposits in case of liquidation, financial support in transferring insured deposit book to another institution. Deposit insurer is engaged in selection of least cost resolution options, could be resolution authority as well, could be receiver and liquidator, and could be involved in designing and selecting different resolution strategies with the aim to minimize the losses for the deposit insurer as a narrow mandate, or for the financial system as a whole, and as a broader mandate. And then the last category of deposit insurer, this is, I would say, most uncommon mandate, risk minimizer. It is for system on top of all, which is relevant for loss minimizer, have prudential oversight powers, resolution powers, early intervention powers, has the possibility to conduct its own risk assessment and intervene in going concern while the bank is still operational. So these are very conditional definitions, but provide for at least some systemized approach how we could define different mandates of the deposit insurance schemes. So what are the policy implications of the deposit insurance system with respect to broader mandates? Of course, we already stressed that payout of insured deposits and contributing in this way to financial stability is primary objective. So contribution to the financial stability by preventing run-on deposits is primary policy implication for deposit insurer. But other aspects, this is financing transfer of asset and liabilities of resolved financial institution. This requires certain principles to be applied, which are defined by IADI and key attributes for effective resolution regimes. This requires that when you make a transfer of insured deposits, this should be based on fair valuation for transfer asset and liabilities, and to ask for deposit insurer to contribute in that amount, which should not be greater than what would be the potential loss of deposit insurer if payout is conducted, and then potential recoveries from the bankruptcy estate is replenished to the fund. The other policy aspect is the possibility to finance transfer of insured deposits, and on top of this to provide liquidity support. This is done in a way when deposit insurer, when transferring insured deposit books, could provide more liquidity on a temporary basis with certain caps. For example, in many deposit insurance systems, that cap is up to the gross amount of insured deposits. In order such financial support to be liquidity support for assuming entity, because in such resolution transaction, if there is a instability on the market, this could lead to outflow of deposit base from the assuming institution. Deposit insurers around the world could transfer assets and liabilities, including all deposit books, but here there might be other financial sources in place to finance resolution on top of deposit insurer. Many deposit insurance systems could provide guarantee or might enter in loss-sharing agreements in such asset and liabilities transactions where insured deposits are transferred. Some deposit insurers can provide capital for the bridge bank. I would say this is a very common practice lately, especially in smaller countries where it is very unlikely for the resolution authority to immediately find a assuming institution for asset and liability transfer in resolution. Some deposit insurers could provide capital in resolution. This is not very common, I would say. And these that are in red, I would say these are not considered as a good practices based on international standards, and if available, should respect at least the preconditions and safeguards as required by IADI and key attributes of the Financial Stability Board. This is to provide capital in all open bank cases pre-resolution, to provide liquidity in open bank cases. For example, such system exists in Brazil, or to provide financial assistance guarantees in open bank cases. That was broadly used, especially in Europe and some Asian countries during the Great Financial Crisis. I mentioned about the preconditions and safeguards in order to respect good international practices. But this is not just to comply with principles of IADI and Financial Stability Board, but this is also in order to address moral hazard issues, market competitiveness, and to contribute in a broader way to the financial stability. And these requirements and preconditions require that shareholders should bear losses first in resolution. When we have a resolution, there should be a safeguard that no creditors shall be left worse off if the bank would be liquidated. That also refers to the deposit insurer, which means that if you are requested to participate in resolution, to finance resolution as a deposit insurance scheme, you should assess what would be your cost if the bank would be liquidated, meaning to pay out and then to recover from the bankruptcy estate, comparing with what you're asked to financially contribute to a resolution. Independent valuation in resolution, this is very important, because you could not have credible resolution strategy where deposit insurer could participate without credible and independent valuation in resolution. Otherwise, you might be requested to pay twice. Once, by providing funding in resolution, and second, when the new resolved bank, because it is not properly evaluated, fails again, to absorb losses when you have to pay out insured deposits for the second time. Some countries with broader mandates put cap on financial support measures that their deposit insurers could finance, and such caps exist in legislation. For example, that in some countries, such cap is the gross amount of insured deposits. Deposit insurer could not contribute more to resolution than the gross amount of insured deposits of the failed institution. Controlling decision-making on such funding, binding or non-binding opinion of the deposit insurer. And here you need capacity. You need capacity to assess the viability of such a resolution strategy. Risk assessment and management capacity is a key when you have to, when you consider to expand mandate beyond Paybox plus mandate. And of course, credible, available, and pre-committed public backstop from the Ministry of Finance is essential, because alternative measures could very easily deplete the fund very fast. And you might not have money even to deal with small payout cases after that. Financial stability implications of expanded mandate of the deposit insurer. These are to protect depositors with minimum disruption to the financial system and continuity of the business cycle in transferring assets and liabilities. This is because you don't have to liquidate good assets. They keep working for the economy, they keep working for adding value to the economy. This protects asset value of transferred assets with minimum disruption. Expanded deposit insurer mandate complements crisis management options of other financial safety nets. And as we already said, it addresses moral hazard issues if the internationally recognized principles, which are no creditors first off, shareholders, and bear losses first, if we comply with these principles. Financial stability implications of these four conditional mandates of deposit insurer. Paybox mandate, this is very narrow mandate related only to payout of insured deposits, and it contributes by preventing run-on deposits and has no other policy implications. But here, to be effective, you need a very well-designed and clear trigger for payout. Paybox plus mandate, which I said is the most common. Of course, on top of the policy implications to the financial stability of the narrow Paybox mandate, it secures continuity on bank services, avoids liquidation of good assets, and preserves value of transferred assets, preserves business cycle, and also keeps good assets working for the economy. Contributes to the financial stability by protecting the interests of all creditors in accordance with the priority scheme in place. This is optional when the deposit insurer is liquidator or receiver. Loss minimizer. On top of this, in loss minimizer mandate, deposit insurance could finance the resolution in a broader way. When the bank is still working in the market and is just entering the point of resolution or is in liquidation, so deposit insurance scheme could provide funding in liquidation case as well. Deposit insurer in such mandate could take part in decision making in resolution strategies, so to minimize the losses for the deposit insurance fund and for the broader system as a whole, depending on the public policy objective. And in risk minimizer, which I said is the most uncommon, but for example, for Northern America, for some Eastern Asian countries, this is standard because of the mature deposit insurance systems in these regions. Deposit insurance system is a resolution authority and supervisor, and thus contributes in a broader way to the financial stability and could have a full range of tools, what and how to finance the resolution, together with the power to design resolution strategies and to supervise institutions. What are the risks when you decide to expand, for example, the mandate of the deposit insurance system? Moral hazard risk, when you don't comply with standards and good practices as recognized by IADI and Financial Stability Board. And this moral hazard could come especially in capital support and liquidity support in open bank cases. Risk of double payment of insured deposits. If you are involved in financing resolution transactions without capacity to assess the risks and the viability of such resulting resolved institution. And lack of internal institutional capacity to assess the risks is another risk in expanded mandate, because you might not be prepared to be partner of other safety net players with in line with powers and mandates as provided in legislation. How to address these risks? By securing strong governance, applying good practices, resolution safeguards, to raise deposit insurer capacity when you take decision to expand the mandate, and when you decide to expand funding options, they should be balanced with the powers and authority of the deposit insurer. As a conclusion, I would say that capacity of the deposit insurer is essential. Sufficient backstop is very important, and credible backstop is very important when you decide to expand the mandate. Applying safeguards, what and how could be, what are the technicalities to finance caps, principles, least cost test requirements, this should be in the legislation. Governance of the deposit insurer is very essential. I would say balanced governance. Different stakeholders to be represented in a balanced way when you design the governance structure of the deposit insurer. Public accountability is essential in order to disclose to the public that what you have taken as an action is based on principles and not decided ad hoc. And gradual maturity of the deposit insurer is required in order to expand its mandate. Thank you very much for your attention.
Thank you, Rosen. In a typical class, that would be a whole course, I think, with what you have shared with us. Like I said, I think Rosen has typically walked us through a full DPF course. I will be opening the discussion to the floor, but before I do that, Rosen, I want to thank you for the very elaborate presentation. This morning, David indicated that Africa is the fastest growing. In fact, the era of digital financial services is even posing more challenges to DFS, to Deposit Protection Fund. In this era, I just want to ask one or two questions. In this era of the high growth of digital financial services, we want to encourage more people in the financial sector, and yet the mobile phone is being used as a payment system. Financial institutions are encouraging what we call single customer view in the morning, to get a full view of the customer and rationalize their information. What do you think the new deposit protection agencies should do better to cope with this growth, to cope with the growth of new financial service providers like mobile network operators, to encourage people to provide all the information so that a DPF can actually have all the information necessary to pay quickly in case a bank goes down? So that's the first question. The second one that I wanted to ask you, you had the governor this morning, he made reference to recent closures. The central bank here has been called all sorts of names, even when they try to do their job very well in resolving or intervening in good time. They said, no, but you are doing so many things, you are trying to resolve, you are a liquidator, and they have been baptized all sorts of names. What advice would you have for deposit protection agencies? Uganda's, I think, is a pay box, the initial stages. Bank resolution anywhere is very difficult. I remember in 2017 when we were in Basel, the deputy governor of the Bank of Russia said closing a bank in Russia is one of the most risky things. I think we have seen it in Uganda as well. What examples, what would you tell the DPFs, the new DPFs in Africa? And you talked about capacity at length. What are the things that you think we should do to grow this capacity within these institutions in quickly resolving bank challenges? So once you've answered those two, then I can put across the questions.
I think that it is obvious that in the case of Uganda, and not only Uganda, but in other African countries where mobile money accounts are as a number larger than bank accounts. I think in Uganda you have 21 million mobile money accounts and, correct me if I'm wrong, close to 12 million bank accounts. It's essential, next step is to consider how to include mobile money in deposit protection scheme. Of course, how to do that was the question. I think close cooperation with regulators is essential. You remember what you did when you had to identify holders of SIM cards. I think that similar approach should be done when you have to identify these holders of mobile money accounts, but they should be, you should work with the regulator on that front. Not only to identify, to properly capture the quality of the records and those mobile money holders which are behind these accounts, but also for macroprudential reasons. You should try to, together with the regulator, to address macroprudential risks with respect to other risks to the financial stability for these escrow accounts, which are where the mobile operators keep this mobile money in order to prevent the risk to the financial stability in case of a failure of a bank where mobile money operators probably concentrated most of these escrow accounts. So there are many multi-layer decisions that should be taken in order properly to design such system, not only for identifying customers, but only on macroprudential and regulatory front.
Yeah, the second one was on the resolution capacity.
On the resolution capacity, I think that the countries in Africa should gradually expand the mandate of the deposit insurers. Definitely, I think, and it is obvious even in the case of Uganda, you should have the authority to finance on behalf of insured deposits transaction where insured deposits are transferred to another bank, applying these safeguards that we just ticked. We didn't even go into details. Maybe in some cases, in some countries, you could consider to provide a liquidity up to, in a resolution up to the gross amount of transferred insured deposits. But I think that for new established system, such expanded mandate should be gradual. With respect to capacity, I think that such conferences and such platforms, such as IADI, international cooperation, sharing experience is essential, and you should invest in your staff, in your people.
The program for tomorrow, we're starting at 9 a.m. sharp. This evening is a private evening. For those who are resident in the hotel, feel free to visit all the different courts, the good kind of courts, the kind you want to find yourself in. Tennis court, basketball court, not the bad kind of courts. There's also a golf course that this hotel is famous for. If you're not a resident of this hotel, don't worry, you'll still get a chance to sample the golf course. Tomorrow afternoon, we have recreational activities for all conference participants. All the golfers in the room? No? None? And Mr. Kagora, let me try and sell your sport for you. It's the one sport you can play even if you're not physically fit. So please, come and join the golf game tomorrow. There will be jogging as well and basketball. For those who will be traveling back to either Sapphire or Nikan Hotel this afternoon, transport will be available. You'll just meet in the lobby of the hotel after the coffee break. And if in case you want to see more of Uganda, I know whenever I travel, even if it's for conferences, I always feel like I'll never come to this country again. I have to go and see something. I have to go and do something. And sometimes it's hard if you don't know where to go. What do people here do for fun? I visited Nigeria once and I Googled a place. I Googled a place and I called a taxi cab and I told him, take me to this place. Nigeria is not like Uganda. People in Uganda are very calm, very humble. I think everyone is calm compared to Nigerians. People in Nigeria are quite empowered. The taxi driver told me, why do you want to go there? It's so far away. Don't go there. And I'm thinking, I'm going to pay you to take me there. So if you want to be adventurous, on Thursday we will be going to the source of the Nile in Jinja. So we've taken care of that for you. Don't worry, we're going to have a day trip on Thursday. Just keep that in mind. Tomorrow morning we're here 9 a.m. sharp. And then in the afternoon we have the recreation activities like I've mentioned. Members of Kenya and Uganda, we are next door. Everyone else, it's a coffee break and then departure at leisure. Thank you very much. We've come to the end of today's program. You can give yourselves a round of applause. Let's keep the same energy tomorrow, bright and early, 9 a.m. Thank you.